Okay, let me see. Mic check. Good morning, everyone. Good morning. Good morning, everyone. It's April 16th, Thursday, April 16th, 2026. It's a new day, fresh start. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, live technical analysis, and actionable trade setups, all with a focus on mindset and disciplined execution. Each morning, we'll come in with one goal: to build structure before the open So we're operating in alignment with the dominant trend, not guessing, not chasing. All right, guys, so let's map it out. Just start off with the daily chart here on the left. Let me bring up the clearer view. I think we all know what we have here. V-type recovery. This is a weekly chart. Hang on, I was working on some higher time frame stuff. Bear with me. Here we go. All right, so here we are clearly above the prior high, which was our all-time high at 70.43, and currently ES futures are gapping up above that high and also above yesterday's high. So as we dig into today, where are we opening up we're opening up gap higher above yesterday's high and above the settlement. So first idea is, what are we going to look for in terms of longs and shorts? So let's cover the bullish argument, the most bullish case, and then we'll kind of work our way backwards to what we could expect to see on any potential downside move. Okay, so currently opening here, gap high above, like as we said, above yesterday's high. So the first thing we want to take note of is what the overnight high is. Overnight high coming in at 78.5 currently. And we are about 22 minutes before the open. So do we get an opening print here, somewhere up gap higher? And our overnight inventory is 100% long, with just one dip below the settlement. I think we can safely assert that prices are long overnight, that traders are long overnight. Okay, so the first thing we have to consider is, do we open, look above the overnight high? And if we get above the overnight high and find some acceptance, maybe get a dip down below it and then reclaim it for a move to a new all-time high. Ultimately, looking for a higher time frame target of up there near 74.50, but that's the higher time frame. Let's just stick to the day time frame. Another potential outcome that we could see here is, say we do open, we look above the overnight high, and say that we fail to find that acceptance, and prices roll over and come back below into the overnight range. If that is the case, and we come back up and test the overnight high, and that acts as resistance, then I think that gives us a good opportunity for a potential short trade that targets a gap fill. Okay, so first scenario we have laid out is, do we get a bullish move open where we test the overnight high, get above the overnight high, pull back to it, find some acceptance, and then get a move higher? Or does that move above the overnight high fail to gain a following and roll over and come right back into the overnight range? I think that then any retest of the overnight high that fails to reclaim it, I think that presents us a pretty safe short opportunity for a gap fill back down to yesterday's high at 70.64.50. Okay, so let's say we open here and we fail to test the overnight high. So say we open right here, 70.72. We're going to take note of our opening print as soon as we get going here. And price immediately comes back down, test yesterday's high, gets down to the settlement and comes back up, tests yesterday's high, and that holds as resistance at 70.64.5. I think that makes the target the overnight low. I'm not a fan of selling within the overnight range at a failure of yesterday's high, simply because 70.64 is yesterday's high and the overnight low is at 70.55. So that's not really great risk to reward there. Instead, what I'd be looking for on that is, say we get below yesterday's high holds as resistance. I'd be more interested in seeing what happens then at the overnight low, right? So here's our overnight low, which lines up really well with our Globex open, as well as our yesterday's pullback low, right? So yesterday afternoon, we rallied and we put in a low, a kind of a base or a short-term pivot. And that was 70.54. Okay. So say we come down, overnight low, get below it. What I'm going to be looking for is a potential move lower that fails, and then a reclaim where we kind of get like this, inverted head and shoulders type pattern, right? So we look below the overnight low, sellers fail to attract a following, and that it quickly or eventually reclaims the overnight low, and that overnight low then acts as support. And do we gain acceptance back within the overnight range? I think that's a great setup that we can then target the overnight high. Or maybe just, first target would be yesterday's high, and then we can think about, does it extend up to the overnight high and potentially up to new highs? So let's say that we do get a similar type look where we open, price just cuts through yesterday's high, gets back into range, and we breach the overnight low. And on the reclaim of overnight low and the Globex open, price failed to reclaim settlement and gain acceptance above yesterday's high. And we start to chop around here, go into the chop shop, and prices retrace. I think that on the break of whatever pivot low that was, that will offer us a good short opportunity. In that, the thinking there is that we would go down and test yesterday's value area high at 70.42 and potentially a move down to yesterday's volume point of control, which got stranded down at 70.35. So maybe we get something like this where prices come back down, come up, we chop around a bit, fail to attract the following, and then we get a move down here. So there's gonna be a trend line probably around here somewhere, right? So I don't want to short it here and have to sit through 10 points of drawdown before the trade actually works out. What I want to do is recognize if on any reclaim we put in a lower high. So say we're trying to gain acceptance back within the overnight range and prices fail. If we put in a lower high here, we get this kind of ascending trend line that seemed like a higher low. We can short the break of that trend line and get a better price with clearer risk, right? That'll have a clearer risk profile because we would be shorting up against this high, 70, 60, 50. And then we could be taking our scales out into whatever pivot low we're looking to trade through. Okay, so let me just clarify that one more time. Clear this up. Say we get the move low. Say we get the move lower, right? Prices get through the overnight low in the Globex open and settlement. We're unable to reclaim settlement in yesterday's high and get back into the overnight range. The price tries to reclaim it again, fails, and then starts to fade lower, there will be a trend line somewhere in here, and we can look for an entry into the failure of that, a break below that trend line, right? Get a favorable price here, somewhere in this zone, and have closer to our exit where we're wrong. And then we can potentially look for a move that takes us below overnight low, and then eventually down into value area high 70.42, and potentially test of yesterday's volume point of control at 70.35. All right, so that covers pretty much the bullish argument and the higher argument, the lower argument. Let's see, what would it look like if we just chop around and say we come down, we reclaim yesterday's or the overnight low, consolidate, trade slightly higher but unable to claim, and we form what would eventually end up in being a doji type day. Then obviously we want to stay on the side of the trend, so we would be looking for any retests of a higher low here that we can get a favorable entry really close to our exit where we know we're wrong below the overnight low, and we can look to scalp that right back within range. All right, so that covers the bearish argument, the bullish argument, and also the chop shop argument, the dreaded chop shop. We have to be careful to not, because we're so high and so we've come so far so fast. A common pitfall that often happens is we start to think, prices come too far too fast, and it's not really so much about price coming too far too fast. It's more about what prices are being accepted. Okay, so I like to look at it as, it doesn't matter what happened in the past. Let's stay short-sighted here. Our price is being accepted. So if we get below the overnight low, dip into yesterday's value area, fail to gain traction below that 70.54 pivot, yesterday's afternoon pivot, that would just signal to me that bears are not aggressive, sellers are not present, and that we're probably going to chop and tilt higher. But the tape is telling us consistently that that higher. So let's look at here. Let me show you this look. Okay, hang on. So let's take a look at the profile. I want to show you something here. Okay, so here's a volume profile chart. Okay, so this is the overnight session relative to yesterday's session. So, here we have yesterday's pullback low. The area that we're identifying as a potential look below and fail area comes right in here at 70.54, where you can see the single prints start. Okay. But I want to show what I want to focus in on. This is what kind of is driving my narrative is, okay, so it's hard to, I hope you guys can see it on the screen. It's really stretched out because it's a 263 point rally. Okay. And the profile is so thin, I have to extend it out. But really quickly on this look, I want to show you something. Each time, so we've moved so far away from the 5-day value area, right? So this is a 5-day profile. Okay, the last 5 sessions, the last 5 RTH only sessions. So the volume point of control for that period for the last 5 days is down at 68.57. All right, 68.57. We are trading close to over 200 points above that. So are we gonna begin to think that we are going to come back down and test that value area and close a 250 and over a 200 plus point? Are we going to fade 200 plus points to go back to test the volume point of control from the last 5 days? I don't think so. But what I want to focus in on is this. See how all these distributions, like on the way coming down here, look at all these distributions that we formed, right? So we have this one here, right? We have this. Let me use the different marker because my drawing sucks. All right. So look, we have this distribution here. We have one tiny one here. We have this one here. A couple of little ones right here. Right here. Right here. And then ultimately up here. All right. So look, every time price has on this rally, right? Price has continued to find acceptance at higher prices, right? So all this volume, we got true gaps, right? Gap and go. This high volume area held. The next day we got another high volume area. So all of this signifies is all these ascending volume profiles. What we can discern from that is that their price is finding acceptance and higher value, even though by the metric of the profile, it seems like it's so far and overextended. Well, the thin parts of that value of those value areas is below us. So each time we've formed a wider distribution, we've ultimately the next day formed a higher one. And so what we need to read into that is that just further acceptance of higher prices. And that's what the case is until it's not. Can we expect a pullback? Sure. I mean, ultimately, I think we are going to see a pullback. You know, something. Hang on, let me get the chart up. I think that ultimately we have to start. We would start looking for something that, you know, some type of correction of this move. Right. This is a really super impulsive move. Right. So somewhere in here, there's going to be a higher low. Right. We can expect that there would be a higher low. Maybe we come back and back test some of these moving averages. Let's take a look at the daily chart. This is a 4-hour chart. Right. So ultimately, do we come back? And we are very far extended over the 9, the 21, and the 50, the simple 50. Okay. So ultimately, I think we will get a pullback and form a higher low. But right now, it's, you know, the market is rallying. It's in buy mode. It's been confirmed every day. Eventually there will be a pullback. One area to note here is this gray box I have on the chart is, so this is our initial up thrust. I wrote about this in the opening print. This was a Wyckoff style distribution top. Right. So our up thrust and then our up thrust and distribution. So we had an up thrust right here, up thrust with distribution. And then we had a last point of supply on this high right here. So this high came in at 70.35. This high came in at 70.43. I think that if we pull back and test those areas, even today, where we test the 9-period moving average, that would be the most bullish outcome, that these highs act as support. And then for a move to the ultimate target, which is up there at 74.50. All right. So I think that covers that. Make sure, let's keep an eye on that 70.35, 70.43 band in case we do get below the overnight low, and yesterday's pullback low at 70.54. It's kind of neat how it's neat how the single prints line up really well with that. Sometimes you get really good symmetry. And if we're looking at yesterday's profile, right, we have this pullback low, single print start at 70.54, and those run to 70.48. The second set of yesterday's single prints are 70.46 to 70.42, which lines up with our higher time frame retest of the breakout high. Okay. I wouldn't be surprised if we chop around a little bit, but when I was looking at the flows information this morning, I can share that with you guys. One thing to note is that volatility is being suppressed here, right? So the Vega profile is telling us that the volatility is being suppressed and that dealers are supportive of this rally. So typically what you're going to see in with these type of flow environments is you're going to see larger moves overnight, and then RTH is going to have a compression of range, right? So, but and that's typically what you see, but that's not what we've seen over the last 2 to 3 sessions. What we've seen is, bull flag continue. We've seen rally during RTH, bull flag consolidation overnight, continuation of the trend into RTH. All right. The pattern has repeated. So does Monday, Tuesday, Monday into Tuesday and Tuesday into Wednesday. Does it go into today? I'm not sure, but we'll have to see on the open. We have our levels framed out, so we know what we want to see and where the story changes for us on any type of really bullish action is if we get down into yesterday's volume point of control, any weakness first below 70.54, and that overnight low and settlement start to act as resistance. We can look for a move down to 70.42, ultimately 70.35. I think we have to get, if we do get below there, and we're going to get there, I don't think that the price will bounce at those levels. If price does stop there, then start to look for acceptance and then maybe, a move higher. All right, guys. So that's how I'm framing out today. Really quickly on the flows. Let's just see. Where's the skew model? Hang on. Yeah. So here's 1 month skew. And you can see that, the 1 month skew for SPX is higher. So you can see here where a call bias environment, all bullish action. All right, there's the opening bell. Let's get our opening. Let's make sure we get that opening print written. All right, our opening print 70.71.5. Quick programming note today at 10 o'clock. We have Rev is going to join us, and he's going to give us Rev is our resident crude trader. Red knows about all things, especially like the fundamental aspect of crude production and so on and so forth. So he's going to be coming on today, and he's going to share his insights on what his thoughts are, the broader picture of crude, but more importantly, like where we could trade it today and possibly make some money. Okay. All right. So now let me come back in here. Let me check so I'm running my PTG algorithms today. On the left-hand chart, I have the CCI crossover method. On the right-hand charts, I have an A4 and an A10 strategy running. The A4 is looking for a long trade at 70.61. If price gets there and conditions are satisfied, it will trigger that long trade for me. Also on the A10, let's make sure I have this right. Doesn't look right to me. Hang on. Okay. Okay, you can see there that the A4 triggered long. A4 triggered long. The A10. This doesn't look right to me. Hang on a second. I'm going to shut this down before this algo runs amok on me. All right, guys, any questions? Let me know. Post them in the chat. Everybody watching on YouTube, hit that like button, hit the subscribe button if you like what we're putting out. We're trying to improve the show every day. We're going to have guest speakers, high quality speakers. I'm not sure if you guys saw yesterday, we had Danny and Lauren came on. They were able to share their insights, good stuff from them, and they had a fresh perspective, tons of knowledge with those two. Hope you guys check that out. Also, we have in the works a special OPEX session. So don't board yourself. Don't get bored staring at the screens and pulling off low probability trades. Instead, come hang out with us. We're going to share some broader picture stuff. We're going to have a lineup of guest speakers. So look out for that. Coming to you soon. Hang tight. I'll have an announcement here sometime this afternoon, or midday, I would say. Okay. Let's get that. Let's get this. Okay. Yep. Now I think I got it. All right. So now I'm going to load my. So you can see here that the A4 is triggered. Hang on. Let me get this up. Probably not the best time to do this. I'm going to highlight that one. I have to get this one loaded. Hang tight. Hang tight. Let me just make sure that my risk parameters are correct. That looks right. Yep, that looks right. Okay. Let me get that. Make sure I have the right account in there. Okay. Boom. Got it. Check. Check. All right, we're good here. All right, we're rolling, guys. So I have the 8-4 long here. Let me blow that out so you guys can see that more clearly. We'll swap places with the prevalent chart. We'll come here, move this one down into the corner so you guys can get a better view. And hopefully the trade works out and I don't start the day with a shiner, but that's the way it happens sometimes. We have to be on alert for, for consolidation here, guys. All right. Let's not click ourselves to death. Get chopped the F up on a market that's just been one way straight higher. Man, there's got to be a lot of, red-faced bears out there. I'll be the first to admit it. On the daily chart, I shared it with you guys. I was looking for an ABC type move. Here, I'll show you on the daily chart because I didn't position for it, but I was ready to trade it in the day time frame that way. And I can show you where the trap was. So very clearly here, right? So we had this, obviously you can see this descending trend line, right? So we had 1, 2, 3 touches. On the 4th touch, it was the high of the day. The very next day, we looked above it and came right back in. Okay. So I thought this was going to be the A low. And I wasn't wrong thinking that, right? I thought this was A low. Oh my God, that's so fucking horrible. Hang on. Pardon my Pardon my French. A. Then look, I thought up here, right here on this day, I thought we had it. We looked above, we closed back below the trend line. I was looking for the B. Oh my God, this is so freaking bad. B. And then I thought we were going to get the C move down at least to maybe test this trend line for the C move. Well, on that day, I remember even on this day, which was, hang on, what day was that? God, must be getting fucking old. No, that was Sunday night. Yeah. So check it out. So this was Sunday. That's right. Because so Sunday night we gapped down, and I remember on Friday thinking, well, I'm not going to go home short, but after that rally, and then Sunday night we gapped down. I remember thinking, oh, we definitely got the B high. That didn't work out because then that Sunday night we gapped down like 40 or 50 points. But then within like the first hour or so, we were right back above the gap high. And I knew, I was like, oh, they're going to squeeze the bears. They're going to squeeze them. That B high is off the table. And what an epic rally that. I mean, if you bought that Sunday night low, if you bought the reclaim of the Thursday low at 67.92.50, I mean, needless to say, you're up like 200, almost 300 points. All right. So it looks like the A4, exactly what I was trying to avoid, right? I just got clapped in the face on that first trade. So that better not be how this day is going to work out, because nobody ever starts the day thinking that they're going to get shat on. All right, so let's pull up. I'm going to put up the 5-minute chart here, and then put the A4 back down here on the lower right. Not too happy with you right now, but whatever. The A4 played off so nicely yesterday. The A4 algo played off so nicely yesterday. It was, it was like a look, mom, no hands type moment. All right, so check it out. So we opened. Let's take a look at this chart. What the hell was our opening print? All right, so we opened 70.71, guys, and we immediately got right back to it. So 70.71 was the open. So on the 15-minute, you can check it out. It has a bearish outside bar. And one thing to be cautious about that, guys, is that in these strong type uptrends, you get these bearish outside reversal bars, and immediately, and they're all traps. I mean, here, look, there was one yesterday right here, right? Higher high, came out, took the blast bar low. I mean, I don't think very many people are just trading, single, three candle patterns. Remember when that was like all you had to go with, 3 candle patterns? And I think a lot of people still use that stuff, but it could be good entry technique, but really not. I don't think it's really better than a coin flip, to be honest with you. And our entire job and mission in life is to try to get something better than a fucking coin flip. All right. So what do we get here? All right, chopping back around. Yep. Hey, so be alert, guys. We on chop shop alert here. Chop shop alert, right? So look, we've opened. Let's take a look at what traded at the high. Hang on a second. Okay. Take a look at what traded at the high. Meaning, I like to look at the order flow at the extremes. Like, so how many contracts were traded? What was the delta? Where's their divergence? and that stuff that stuff can really give you an edge. I mean, not it's a micro edge, right? So that's a trigger point edge, kind of the way I like to look at it. All right, so let's check it out here. Hang on. Remember, keep in mind we have. So all right, so yeah, so look, we had no, we don't. It's early signs of this is an early signs of chop, guys. So we had 99 contracts traded at the high, and I do not see much of a divergence there at all. Nothing to see there. No edge. So as you guys know, okay. Oh, look, dipping, guys. All right, so we're getting now down. We know what we're looking for down here. Oh crap. Wait a minute. God damn it. Shit. God damn it. I think I just took another stop on that stupid. Dang it. Fuck. Yeah. Okay. Yep. Oh, that's frustrating. So I hope this is not the way the day is going to turn out. All right. Seriously. Oh, no, no, no. Okay. So I had been streaming, for a while, just privately by myself. I knew nobody was watching, and I was, and to be honest with you, I was trading my ass off. I was doing so good. But I knew no one was watching. And then about a month ago, when we started streaming here, and we started trying to build this out, um, in that time frame, my trading started to like I started to miss setups. I was starting to miss setups left and right, and I was getting a little bit angry at that. But the whole goal for me was always to be able to just do what I do when no one's looking, to do it when people are looking. Right? What's the difference? Well, I thought there wasn't gonna be a difference, but I'm having a bit more of a challenge acclimating to it. And just because I'm constantly talking and I'm not really focused on the price action. So for the way I enter trades, right? That my point and click trades, not the algorithm trades. My point and click trades. So once price gets to here, I'll show you a scheme, a picture I have that I can share with you, because I kind of map this stuff out. Yeah, I'm not sure if you guys can see this, but so this is how I frame. This is my entire trading system, right? So you can see. Or let me just get the stupid pen up here. All right. So right here, this is Manny's game plan, right? God damn it. Okay. So it's my game plan, right? The four pillars of what I do. So I have trade setups, bullish and bearish. Then I have an execution pillar, right? So how am I going to execute on those setups? Right. So first you need the setups, and then you have to have an idea for how you're going to execute on them. So on those executions, I have triggers. Damn, I'm not sure you guys can see this. Let me just do this. Let me know if you can see it or not. Drop a comment. Short squeeze. I don't know, Crazy Horse. Yeah, so definitely a short squeeze over the last couple of days, right? I'm not sure there are any shorts left to squeeze though. What do you guys think? All right, so look at let me know, drop a comment. So look, you can see here, this is so typically when I'm going to enter, right? My execution strategy is I have my triggers, right? So my triggers are delta flips. So what I want to see is I want to see a flip in the cumulative delta at the area where I'm entering. All right. Or, and that's for a quick entry, right? Spike up, you see the taper, volume profile taper, and then you see a flip in that delta, right? Where there forms a divergence. Or you can get an absorption at the zone, right? Where you see the stacked bids and offers are getting filled. So if you're looking for a long, stacked bids are getting filled and the price keeps stabbing down, but it's unable to get below it. And then that's how you can tell that they're stacked. So typically I'm looking for these four type looks at entry. Okay. So delta flips or absorption, I'm looking for bids to hold. And in order for me to execute that, I have to be dialed into the tape. Like I have to be dialed in, I have to be watching it. You know, one thing about that I learned is if you're going to use that strategy, if you're going to employ that strategy, don't stare at it until it gets to your price on. All right, here, quick heads up. CCI triggered a short trade, and we're short in at 70.6650. Hopefully it works out better than the A4. You can see on the lower right, the A4 kind of took a shiner on that one. Let me see, 67. So yeah, I lost about 4 points on that one. Not the end of the world, but no one likes losing. For those of you that are watching or don't know much about me, I'm a baseball coach. I'm super competitive, and I, you know, much like you guys, right? I hate losing. I don't think anybody likes losing, or would admit it, right? But you do have happy losers. Like, okay, I'll figure it out next time. That's not me. Like I'm the, you know, like I have, dude, I can show you guys. Look at this, right? I have like, look at how many mouses I've broken from bad trades. These are all bad mouses that I've like I've gotten pissed off and I've just slammed them up against the wall. That's 1, 2, 3, 4. I have like 6 broken mouses, guys. So last time I ordered a mouse that I really like these ergonomic mouses. I don't get paid for it, just sharing with you guys. Really like these. So last time I bought them, it was on Prime Day. They had them on sale. I bought like 4. I just figured, you know what? Let me just get ahead of it. All right. So the opening print 70.71 is holding. So let's be careful there. Again, we know what we're looking for, right? Yeah, Magister in the Pitbull Traders chat says, I know that my system only makes money approximately 55 to 57% of the time. So I know losses are inevitable, but they are the cost of winning. Yeah, of course. You know, like I think we all commit, right? That's a good point. Thanks for making that comment, Madge. Yeah, we all know, right, that we're going to take losses, right? Nobody comes into this expecting to win all the time. Yet we kind of lose our shit when we take a loss. Or we start like revenge trading or taking it personal, right? You know, I have a friend that told me, you know, we were kind of pointing out certain behaviors, and he said, you know, most people don't mature much past what their maturity level at 17. I thought that was pretty funny. So yeah, so we have that immature approach, and then we lose our shit when we take a loss or two. All right, yeah. All right, guys. So here the CCI algo has me short 70.6650. Looking for a first target at 70.6250. Right. Let's see what this one is doing. Chart trader. Just want to keep that one up on there. All right, so looking for a first target of 70, 62, 50 for a 4-point gain. Look, mom, no hands. I love the trades that get triggered automatically. Boom, there you go. Got it. Got it. All right. So now the next scale is at 70, 58, 50. That's on the left-hand chart right here, guys. Look, I'm kind of blowing it out for you so you can see it live and direct. Let me know if you guys can see it clearly or not. Drop a comment. Looks like we're headed down for that overnight low. Oh, yeah. Let's go, baby. Feel me. Let's go. You know what? Actually, I'm going to blow this out a little bit. I'm going to move it down. I think we're going to get a move down to the overnight low, right? High probability. So here, guys, let me share a statistic with you. 96% of days when ES opens, it touches either the overnight high or the overnight low. 96% of days, okay? Very high. So you can do a lot with that stat, right? So right now, like I'm in this trade. Typically, the algo is going to get me out at a predetermined price that's based upon the risk I put on. But I know that, look, oh shit, we just traded below it. All right, hey, heads up right here, heads up. I'm taking this off. I'm peeling this off right here. I want to take that. I want to so I'm nervous. I want to make sure I take profit right here because this thing could snap back. We could do a look below and fail of the overnight low. All right. So be mindful of that. All right. So now what we're looking for. So now let's dial in and see if we can get the taper down here. So nice. I got that scale. That's awesome. So, of course, right? So it's probably going to blow out and go straight to 70.35 like we thought. And that's only because I exited. So yeah, perfect. That's the way it works out, right? It's the one that you exit on time. Oh, look at that, blown out. Let's go. Wait a minute, what am I cheering about? Oh, I know what I'm cheering about. So just for you guys watching, I'm running 1, 2, 3. I'm running 4 algorithms. So sometimes I'm in a position and like yesterday I had longs and shorts on at the same time. So that's a big crux of what of my trading, right? Is to have multiple strategies running at the same time. And if you guys want to learn more about those, drop a comment, shoot me your email address. I'll reach out to you and let you know how they work, and where you can get your hands on one. All right, here we go. So I exited that trade. So the A4 short, the A4 long that didn't work out, that I took the 4-point stop, got made back. All right, so pretty happy about that. Oh yeah, look, so down into 70.45. We're getting into those single prints. Heads up. All right, 70, 42, 50. Remember, on our time study, we're looking for an AM low pivot somewhere between 10:15 and 10:45 today, guys. I dropped that in the Pitbull Traders chat. Check it out. Big part of a big part of how I trade is that clock and time study. So. All right, so very nice move here. Let's just get that up on here so I can show it for you guys. Boom. Boom. Let me hide this. Okay. So one of the other ones. Oh, let me get that out. Oh, shit. So I had the short right here at 70, 63, 50. Let's check out the low and how it traded. I think let's see. How many contracts traded at the low, and did we have a delta divergence, right? That's questions we always have to ask ourselves if we're going to like use order flow, if you're using order flow. Chasers, chasers, tracers. What is this? Oh, okay. Dang. So you can see here the CCI algo has staged a long trade. Crap. I didn't want that. Didn't want it. Didn't want it. What do you guys think? Should I let it play out or do I close it? Talk to me fast, guys. I need some help here. Let it play out. All right. I mean, yeah, because I have a long and a short on right now. Don't tell the guys at the don't won't want to tell my brokers that. If you're watching, no, I'm sorry, dude. Look at this. It's a short trade. Fuck. All right. CCI has it short, guys. I messed up. All right, so I'm short in both. I'm glad I didn't close it. I saw the green and I thought it triggered short. Quick read on the internals. NYSE 1.1 positive, NASDAQ 1-to-1 negative. Dude, a huge spike down in the Russell, huge spike down in the NASDAQ. So what do you guys think? Do you think we're going to find are buyers going to step in here at a certain point? Right? I mean, you got to think that, the lockout rally has some people a little bit antsy on the sidelines. Magister says, I'm still short and letting it run. Where are you short from, Magister? Let us know. Sellers, buyers. Oh, dang it. Look at that. Spiking. Let's see. What are our ticks? Oh, yeah, we had a negative 500 tick down there at the low. Price is spiking here. Moving higher. All right, so it's back to what is the back testing? Price is back testing the overnight low at 70.55. Okay. We had 188 contracts traded at the low. Come on, baby. Can't move that. Can't move that money. You know better than that. Leave it alone. So close, though. That's one of the things about the algorithms, right? Like they don't know the structure or the plan that I just laid out, right? So this algo has my stop, which I just got stopped out at. Fuck. It has a stop like just right above the overnight low, which I wouldn't have put it that tight. But I've learned to let it rock. Dude, you know what? Just let it go. Let it play out. Let the law of large numbers play out. So my early assessment of this being a chop shop is right out the window. Throw that out the window with everything else that doesn't work. All those overnight longs, again, their pockets run right now. All the overnight longs just got snatched. All right. So let me put a stop in here now that we have a kind of a pivot. We have somewhat of a pivot here at. You see, this is why I wanted to move that stop a little bit because I got stopped out at 70.57. It made a fucking high of 70.57.50, and then now it would have been hitting the target. Perfect, beautiful, fan effing tastic. All right. Anyway, that's kind of frustrating, man. This is not the day that I'm having today. I'm not going to have that day today. All right. So whatever. You win some, you lose some. It's going to be a net positive. I do have this 14-point gain though on this one in the center chart. So and I trimmed one at 10 points. So it was a break of like we said in the pre-market, right? We said that we were going to form a high pivot, right? So here was the call in the pre-market. Let me pull up that chart so you guys can get the same visual. All right, remember in the pre-market we said that if price came down and made a spike low and came back up, and then it was going to leave a trend line, an ascending trend line, short the break of it, right? Right here. Terrible drawing. I promise I'm going to get better at this. So the idea was short the break of that trend line, entering right around here, right? That would be 70, 62, 70, 60, around there. So that's what I'm in on this chart right here. That setup played 10 points. Thus far, the overnight low is acting as resistance, but we're starting to chop around here. I'm not gonna sit around in a short that I'm up 10 or 15 points. I'm not gonna sit around too long in this in an uptrend. I'm counter trending right now. And so that's not a good look. All right, chopping around here. Let's take a look at the order flow stuff. What is this telling me? Yeah, we're chopping around below the overnight low, right? That J in the J Morock types could just be a short trap. Yeah, I 100% agree with you. 100%. I mean, you have to think that way, right? I mean, I don't know. Maybe some people are top calling. There's always that noise out there, right? But if you've been trading the bear traps, you've been winning. All right. And so don't let someone misguide you and tell you that, the risk reward or something is not whatever. Just keep winning. Just keep putting on the trades that win. Let me see. Let's see. What did JB have? I got 69.75. All right. Coming right back up to test that overnight low. I'm not playing around with this. If it comes back up there above the Globex open, what is that? All right. Looks like I'm going to get stopped out for 5 points. Let me see. What did JB post? I always like to hear what JB has to say. 69.75. 69.7. JB's looking for 69.75. All right. Looks like I'm going to get taken out here. 58. Yep. 59 is actually the low volume node there. So give it a little bit of room here in the hopes that I should have just took the 10. Coulda, woulda, shoulda. Yep. So Magister says we could start looking for bearish divergence on the daily chart. If that confirms, we could have a major high on our hands. So yeah, I have thoughts on that. I think that we are. So there's a common saying that says, in technical analysis, right? So tops form, bottoms happen, and I think that the next dip that we like the dip we just saw, I think the next one is the truth, right? I think the next one probably comes in after maybe like July, August, maybe like around that time. And I think that one is going to be that one's going to be lights out. That one's going to be, really, really, really bad. All right, so I'm out of that trade now. I should have just took the freaking 10. Coulda, woulda, shoulda. Anyhow, so back to this. Oh, the A4's got me long. Hey, heads up here. A4's got me long. Check it out. Blow that one up for you. So when you're running this many like I am, you need a lot of. First of all, you need a lot of accounts. Second off, you have to you have to put a lot of thoughts into managing, like setting the risk for each. Right. So I know that if I'm running 3 algorithms, I have to account for, say, all of them trigger a trade and all of them fail. What is that going to look like? That's the way I'd like to manage it. So yeah, so Magister, look, I think so personally, here's what I'm focused on the daily chart, right? Okay. So let me just blow this out here while I'm just gonna let that A4 work. Um just gonna let that A4 work. It's got me long 70.53. It took a scale at 70.58. Yep, and it's out now. It's all out now. So park that one back down here. Hang on a second. I know this gets a little messy. Oh, look at that. Right back above the overnight low. So remember, guys, we're getting that. Look, I don't think so. Man, I don't know. It's tough read here, right? Tough read. So when you have these big like uptrends, the bounces become that's the reason why I'm always more of a bull than a bear. Because even in down markets, you can make just as much money on trading the bounces. But even like today, where we were like overextended. I read a bunch of stuff about we're overextended. Can't justify the risk to reward up here. And I'm just seeing acceptance of higher prices. I'm like, well, whatever. You can stick to that if you like. But like even though I would argue there's a case to be made that the low of the day is not in, right? Not an opinion. That's based on facts. That's based on data. Um, this A4 triggered along, and I got paid on it. You can still trade the bounces. And then the shorts are just so much harder to make money on. I'm not a bull or a bear in any like more, alignment way. I do what's easier. It's easier to buy. It's easier to be long. Oh crap! Sorry, Rev. Oh man, I just yes, please. Sorry. All right. I'm gonna make sure that I have this A4. So heads up, guys. Rev's gonna join us now and give us his thoughts on crude oil. So looking forward to that. Those of you guys who are watching at home, watching on YouTube, Rev is Rev is a guy who really knows crude oil. And ever since the Iran war happened, it's always good. We have a bunch of people on the team that trade different things. Like if you were watching Danny and Lauren yesterday, you saw that Danny was talking about. Yep, just feel free to bust out in here, Rev. Danny and Lori were talking about corn and cattle futures and so on, shit like that. And so we have a strong team in terms of people that know different strategies and trade um different instruments. And so Rev is a guy who's always known and been kind of like an authority on crude, like, even, for years now. And so now that the war is in place, right, it's kind of put us in a place where now we can go and pick Rev's brain about certain things and so on. So happy to have him join us. He's an asset to the team. He'll be joining us here shortly. And hang tight, guys. So we have a ton of fantastic traders. That was really the reason why we decided to start, sharing this more with other people, is because we have such a strong team and we were doing all of this already in private. So it was like, all right, well, let's have some fun with it and blow it out and just like, open it up to the team. We still have we still have a very exclusive I am pro chat, right? And that has to stay exclusive because that has more, that has money managers and, people who want to remain anonymous. Okay. People who don't want to, probably a bunch of Gen Xers who don't want to be on social media and just want to trade their book and have a nice day. So that's going to remain that private, but whoever wants to, join us on this public forum can feel free to do that. And Rev is one of those guys. I'm looking forward to having him on the chat today.
You hear me, Manny?
All right, so looking for a rollover here up against that higher pivot. We'll see if that works out. So this is a play on that fair value gap close right there at 70.61. I was too busy chatting. I should have been short 70.60. Should have been short 70.59.50. I didn't catch it until 70.57.50. You guys can see that there. That's just like, yesterday I would have just not taken the trade, but I don't, you know what? I'm just gonna do what I do. Hey, Rev, can you hey, welcome to the show, Rev. Thanks for joining us. Can you hear me?
Can you hear
I don't
me?
think you can hear me yet. Or maybe I can't hear him. Oh shit. My fault. I'm sorry. Sorry, Rev. I had my browser muted. I'm a terrible host.
Can you hear me?
I can hear you now.
Okay.
Sorry about that, dude. I'm so
Yeah,
sorry.
no worries. No worries. You can hear me
Yeah,
though,
I
okay, right?
apologize. Yes, I can. Thank you for joining us. Thanks. I'm
Oh,
so bad. I had it muted because I thought I muted Live Squawk because I didn't want to hear it while I was doing my opening monologue. But anyhow,
no,
welcome
it's
to the
all
show.
right,
Thanks for
man.
joining us.
No worries. I'm happy to be here, but yeah, no, I understand being muted. It wouldn't be the first time.
Yeah. Yeah, I wish I
No
had a
one
mute
wants to
button
hear
for my
about crude oil
kids.
at the best of times.
All right, just a real quick update, guys. So on that short, I took a 750, 70, 57. I just got my first scale for plus 5 points at 70, 52. I'm going to move that stop to 70, 59, 75. All right. So 70, 57, not a big position, two contracts short. And then on the lower right, this thing's got me long here. This algo's run amok. All right. So sorry, Rev. So here, hey, just to let everybody know, I gave you an introduction before, but Rev's now going to sit here and talk to us about crude for a bit.
Yeah, I'll stick around for a few minutes or until I bore everybody. But you know, we've boy, has this been interesting. We've seen there's an awful lot of talk out there about the disconnect between futures and the physical market, which at the moment is 38, $40 a barrel, which has never happened before. But I think that fails to capture what futures are used for. And largely, a lot of guys use them to hedge. And so it doesn't necessarily mean that uh, that they have to move in lockstep every day. Now, having said that, eventually they will reconcile. Um, I've been on the board lots talking about how you can be bullish, but still trade intraday moves like crazy, and it's been a very fertile ground for doing that. You were asking about Manny and I were chatting a little bit yesterday about levels, and I think uh, what we're really seeing here is, it seems like nobody really wants to sell below this sort of 80, depending on which month you're trading. Front month is done as of Monday, of course, or the May contract is done by then. But 88 to 91, that sort of seems to be a floor that since the beginning of the war, no one's really willing to sell below. So until then, you know, you can probably buy that. And go ahead, Manny.
Yeah. No, yeah. So you think so yeah, obviously it's clearly a floor, right? So kind of like coming in, I think like 90, let me see if I got this right. Like 90, 59, 90, 60.
Yeah.
Um I like that.
Can I
You know what
share
I
a
like?
screen, Manny, or tab?
Absolutely. Yeah, for sure. 100%.
Is,
Go
is
for it.
that is that doable? Here, let me
Absolutely.
see.
Screen share buttons right down on the right.
All right, let me see if I can do this without totally borking it up. Um, uh, no, it seems like I can't. All right,
You
well,
sure?
that's
Okay.
okay. You got a crude chart,
Okay.
Manny, you can share?
Yeah, sure. Hang on a second. Absolutely do. Hang on. Boom. Actually, let's take a look at my swap, my crude swap. Okay, so left hand chart. This is just my old notes. Left hand chart would be a 2 hour chart. Let me just clean this up for you, Rev. I'm just going to make these nice and clear where they don't where they where they're just blank, so we
Oh,
can
wait.
just.
Hang on just 1 second. It looks like I might be able to.
Okay,
One, mo-
great.
one moment. Please. We'll be right with you. Um, Holy crap! I hate computers. I have a degree in them.
Let me
Yeah,
ping the
you know what? I
maestro.
don't want to
Hang on.
go. Go ahead.
Let me ping the maestro and see if we can get some support here. Hang on 1 second.
Okay. No, your screen's fine, Manny. That works.
Okay, fine. So yeah, so all right. So let me, if I can just look to share with the folks at home or are watching in the chat and also watching on the tube.
Can you make that a
Uh,
4-hour chart, Manny?
Absolutely.
Thank you.
Okay, so here's a 360-day 4-hour chart. You want me to highlight this?
Yeah, that's right.
Okay.
Yeah. So if you take a look, um, you know, well, here, let me back up a stage. First of all, there's a lot of different ways to trade crude. And I made a smart aleck remark yesterday in the room about I'd never seen so much of here's how I trade, and it's the only way I've figured out how to trade. Therefore, it's the only way to trade. Therefore, everybody else's way is wrong. And I think that's a pretty. Um, I'm not so sure that's a resourceful way to trade, but there's a lot of ways to trade this, and I think the big thing is that you'd mentioned it earlier, Manny. I caught, which I thought was a really good comment, that things happen so fast. Well, that really only impacts the shorter term time frames. If you use longer time frames, you can afford to let the trade play out, and not try and outsmart it. And I find that when things are moving as fast as they are right now, people tend to, like, I use the 4-hour chart as my most important one, including the Globex session, not just the RTH session.
Yep.
Uh,
Same.
you, and Jim and I commented on this yesterday with each other that, yeah, I mean, Globex is, way less noisy because all the newsmakers are in bed sleeping. And so, or at least in the West. So, um, so it trades a lot more naturally. But where I'm going with all of this is that, they have cluttered up the airwaves so much, and they know that everybody is playing, that the retail guys are trading futures, and that is a lot easier to control. The physical market, on the other hand, like, there is a great reckoning that is coming, and I've been talking about this for, well, basically a month and a half now. It doesn't mean, just like if you take a look at the S&Ps, just because you're in a raging bull market doesn't mean that there are no down days and that there aren't any big pullbacks. I've watched the last few days with guys saying, "Oh, it's a big squeeze. Oh, it's this. Oh, it's that." It's like, how about just it's a bull market still? you know,
Yep. Good
like,
point. Yep.
that's okay too. But anyway, regardless, crude does trade very technically, very traditionally technically. And if you mute
Really?
the noise, it's still a lot of that still. I mean, even on your own chart there, Manny. I mean, just look at it. The technical
Yeah.
indicators. The traditional areas where you would look to be long, more often than not, just on your own chart, and it's too small for me to see what your settings are, but
All
still
right.
it
Let me
still holds
blow this
true.
out.
It's very difficult to reconcile that. There's a great episode of The Simpsons, where
Love
Homer
The
Simpson,
Simpsons.
is that right? Who doesn't? And
Yeah.
Homer Simpson's watching the NFL, and he's trying to figure out what kind of bet to make. And one sportscaster puts on, calls his shoe in of the week, and he puts a giant shoe up on the desk. And then another guy says, "This is my lock of the week," and puts a big lock. And Homer says, "Well, that shoe is a big shoe. I think he's right." I mean,
That's
there's
funny.
so it's just, you talk about this a lot, Manny, as well. And Madge was saying that earlier this morning about, having a 57% win rate or whatever it is. I mean, that's all important, except for, only if your accumulated wins exceed your accumulated losses. And, you can be right 57% of the time, but if you lose a buck when you win, or when you lose and you only make 50 cents when you win, it's only a matter of time before you end up at nothing. So that's really, like, for trading crude futures, all of that is still true. It's just harder to do it during the day, because if anybody thinks that the crude market, whether you believe it's the administration messing with the numbers, or some syndicate, or the alignment of the stars, it doesn't really matter. Nobody is going to just sit and give people a free ride all the way to the top floor, with crude futures just running up. I mean, there's too many forces working against it. So, but having said all that, my approach is to look at the fundamentals, because it is a fundamental physical asset, to determine, what the general condition is. Then look at the market and its sentiment, its tone, its positioning, all the rest of that. And then for the shorter term ones, it's the good old, technicals. And the thing that there's all this smoke screening going on over here to say, oh, we're gonna, like, peace is gonna break out at any moment. And while I was chatting with you yesterday, Manny, I didn't bother sending it, but I sat there and thought, well, if the breakout of war ended up being the high, does the breakout in peace end up being a relative low? Because after all of this is over, we have a fundamental issue, which is, anywhere from 9 to 13 million barrels a day that's been shut in for 6 weeks. And, it's a little bit like George Foreman. He used to just jab you and jab you and jab you. And it wouldn't be that hard, but you'd sit there and think, well, you know what, it's going to be okay. And before you knew it, he came through with that right that was hiding behind it. And what's happening right now is everybody is getting jabbed and jabbed and jabbed with all this peace talk. But what's behind that is a structural shortage that isn't going to come back online quickly or anytime soon. And so that isn't going to change anytime soon. And I think that, that's not what's top of mind right now. The last point I'll make is that, it is true what has been reported in the news and by the president and whatnot, that there's a whole bunch of boats that are on their way to the Gulf Coast right now to pick up a whole bunch of American crude. Well, part of that is because you had a whole bunch of boats sitting in the Gulf of Oman that couldn't get into the Persian Gulf to load up for 2 reasons. Number one, because, they don't want to get their paint scratched as they sail through it. And number two, Kuwait and Iraq and a bunch of others have basically shut in all of their Gulf production. And so there's nothing to pick up, even if the boats can get in there. And all of those boats have owners and shareholders that are saying, hey, just like truckers, if you ain't turning, you ain't earning. So sitting in the water doing nothing, waiting for the Gulf to open up, and even if it does open up, there isn't enough to load. So they're going to the place where they can, which is the US. And that's where I think we are going to see some huge crude draws, one way or another. I see that the U.S. Administration has summoned all of the big crude producers today for a meeting. And what I suspect is that what's going to happen is they are discussing whether or not to limit exports of products. By that, I mean the products that crude makes: gasoline, jet fuel, diesel, etc. That's what I suspect is going to happen. And the thing is that if they ban crude exports, that just hurts the domestic producers. So I don't see that happening. But banning product exports really hurts Europe and everywhere else, which may be a coercion tactic to get them to join. So those are kind of the machinations at play right now. But in the meantime, I think, I really do think that crude is, I don't think we're going to see it crash down to 70 or 60 bucks anytime soon, unless, and this is the big caveat, and you're always talking about objectivity, Manny. So here's my bear case for it, which is that the economies in Asia and Europe are getting so constrained by physical shortages of this stuff that you end up with demand destruction. And if you have demand destruction, you have to, who are the buyers of crude oil? There's only two buyers, right? The main one, which is refineries, and the other is SPRs. And so if there's demand destruction for products where people are at home and economies are stopped and supply chains are limited, which we're starting to see already in Asia and Europe, then all of a sudden, refineries don't need to run as hard, and therefore there's a lower draw on crude, and therefore you've got softer physical prices. So that's one case for it. Do I think that's the base case? No. But the signal that you'll see is two signals: time spreads, so the front and forward, the 1-2 month time spreads, particularly Brent. And number two is the 3-2-1 crack spread. So meaning 3 barrels of oil produces 2 barrels of gasoline and 1 barrel of distillates. So that, or refining margins. Like when the refiners, when those get too compressed, refiners can't make any money, and so they stop running crude. But we're not at that stage yet. So those are the two bellwethers that I watch. And then you take a look at, just the basic technical levels if you don't want to jump through all those Cirque du Soleil hoops.
Well, no, thanks. I mean, dude, I feel smarter for being around you. Thanks for that.
You're too kind, Manny. You're too kind.
Yeah. And look, to Rev's point, right? Just highlighting on this 4-hour chart. No, it's a super high time frame chart for what we're accustomed to. But look, guys, when this thing was trending, it was following that 9-period moving average pretty tightly, right? So these are 4-hour time blocks. But if you were long and if you were using that as your guide, look, it works when it's trending, right? Look at that. I'm just looking at that. That's just one tool, right? One tool. I'm sure there are many others, but yeah, he's right. He's right. It definitely moves technically. What do you think about this?
Sorry, Manny, go right ahead. Sorry.
No, you go. Go ahead. Sorry.
Well, I was just going to say the arrow that you just drew there. I mean, if you take a look at that, you have a descending wedge that's forming, and you also had one right between the spike high and right in the middle of the chart as well. So it's like there's an easy technical pattern that tends to repeat itself with pretty good regularity. I was talking to one of the other members in here, Tifosi, and and him and I talk fairly regularly, and I mean, do you want to be long or short crude? It really depends on your time frame. So
right.
like I have a big call spread on my moonshot trade, which is that we get a price discovery spike, which is how I think this all ends. I could be dead wrong. Don't bet the house on it. Don't even bet anything on it, because I'm just some guy that makes his living trading crude. But it's but I mean, well, it's the old saying, right? An amateur built the Ark, the experts built the Titanic. So,
yeah, good one.
So, but even still, it's almost like the inverse of COVID is sort of my analog to this, is that it was how far down can crude go when the Saudis were flooding the market at a time when the world was shutting down. Well, we discovered it was minus $37 a barrel. And I almost think that this time it's going to be the inverse, that when, give it about 2 or 3 weeks, when all of these, and prices will probably front run it to some extent, but when all of these shortages really start materializing, and then the fear becomes, wait a second, how long is it going to be before everybody can restart production again? And when you shut in fields, they don't just all of a sudden turn back on like the tap in your kitchen sink. There's permanent damage to the reservoir that happens when you shut in fields for long periods of time. Also, the refineries are designed to run, and they're not designed to be shut down just doing nothing for long periods of time, especially in the desert. There's corrosion, there's sand, there's seals. These things are not, these are very sensitive mechanical pieces of equipment that aren't designed just to be shut down and sit there. And so there's a risk that when peace breaks out and everybody's all kumbaya, and for the first time in 5,000 years, the Middle East is totally, calm to the point where people are willing to bet $30 to $50 million boats with $200 million cargoes to safely sail through there. And again, even if there is peace, everybody's got to believe it. And, but even if all of that happens, then the question is, well, does all this come online smoothly? And, I've got money for that bet.
Yeah, so that's interesting, right? Because there, I don't think that any of that's going to be. Sounds like it's going to be a smooth resolution, and obviously above my pay grade. But I just think that. So we had the last, we had the last spike during the start of the Ukraine war. And when I measured them out, let's blow this out a little bit. When I measured them out, it just didn't look. It looked like this spike. So this right here is kind of like the Ukraine war time, right up here, right?
Yep.
And so if you just kind of think about what each news event meant, and look at where we are here, it doesn't line up. But
so that's a really important point, Manny, and that's exactly what. If you remember, I think it was at June or July last year when the 12-day war happened, and that Sunday night futures. And I said, like, I'm selling this, like, because everybody told everybody and the news what was going to happen. That's not how you run a war. It was highly performative. It was a lot of, it was a big Kiss concert, except for without the music. And so, and same thing with so you go back to the Ukraine situation, you go back to even the Gulf War, crude got sold hard at the beginning of those. And that's what people tried to do again. That's what people tried to do or what happened with Ukraine is everyone tried to get long and got sold off because they thought that we were going to have a 3 million barrel a day, production loss. And that ended up not happening, compounded by a 1 million barrel a day SPR release. So, so that's what happened. Except for this time, we didn't have a fear of a 3 million barrel loss. We have an actual somewhere around 10-ish million barrel a day production loss. And it's a little bit like a hotel room, right? Like, I mean, if you don't sell that hotel room tonight, you can't sell that hotel room twice tomorrow and make up for it. Like, the day is gone, And so it's the same thing with oil production. The oil may still be in the ground, but the rate, how much oil comes out of the ground each day, you can't just produce. If you lose 1 million barrels of production today, you can't just do 2 million tomorrow and catch up. It doesn't work like that. And so for all kinds of technical reasons, so that's the thing, is that by the end of April, we're over 1 billion barrels of oil that we've lost. And which is just it's a little bit like Austin Powers. That's a bajillion, gajillion barrels sort of number that we've never experienced. So people are trying to do what's happened in the past, which is sell off. And, you know what? You and I were talking about this yesterday, Manny, about how, everyone missed this, 63 and change to 7,000 run on the ES. And they're mad they missed out on it. And so, so they were wrong about missing out on it. So they're going to be right about catching the top, and they're shorting it and shorting it and shorting it all the way up, which is adding, that's what's fueling rise.
That's what usually fuels the last third of the leg.
Yeah, exactly. Right. And so I think that's very similar to what's happening here. And again, I could be dead wrong. We could see crude fall to $70 by the end of the day. I mean, it can do anything, and it often does. But if you zoom out a little bit, because I know everybody on here, thinks using the 5-minute chart is a signal for long-term investing.
We were laughing about that yesterday because, I overheard someone, I read someone on I saw someone on socials talking about, Yeah, I think because obviously this guy had missed the long trade, right? So he saw like a 15-minute doji on like a mag chart, and like I think it was a Nvidia or something. He said, "Oh, that's how solos start."
Yeah, well, and you know what? That may be the case. It's just, if you do it over and over and over again, how does that work out for you, right? I mean,
Right, right, right.
it's so that's
That's why
where I go
process is
back.
so important.
Absolutely. And if you are a technical trader, then just be a technical trader. This is not the time to try and learn, like, on the job training, learning about crude fundamentals. This is not the time to do that,
Right,
So,
right.
right. But it is one of the things that, if you want to get a cursory understanding of it, it's, yeah, like those barrels aren't there. The big question is, how are they going to come back? And I haven't seen, like, we haven't even had, uh, here's a crude trader, quoting Gandhi, but you can't simultaneously prevent and prepare for war. And, so, and what I see is, what they're doing is that the George W. Bush and that carrier group is full steam ahead on the way to the Middle East, and a whole bunch more troops are going, and a whole bunch of assets are being put in place. And I have a hard time believing that they're doing that just to flex their muscles and try and flex their way into submission. I mean, they probably plan on doing something with that. Now, do I think I can outsmart the U.S. military? Hardly. I mean,
So
they're privy to
let me
information that we don't have. But the simple fact is that is still uncertain, and nobody is going to even start production again, or even try to restart production, until there is some sort of durable platform that they can start from, where they don't have to worry about shutting in again a week later or a month later. That's what the real issue is here.
what do you think? So I have to ask. I mean, this is just topical stuff, but what happens if the
I think Badge is
U.S.
right in his
takes?
comment that he just made there. Sorry to interrupt you, Manny. I
No,
apologize.
go right ahead. So
Oh, just
Matt
Matt.
just said,
Go ahead.
I think there's a relatively low risk, long term, low trade on crude with the 86.96 low as a stop. What are your thoughts on that, Rev?
Yeah, sure. But it's not so much about being right. It's okay. So
You
if
can make
if
money
you
on it.
if we hit 87, and we figure that the upside is even $100, technically, I mean, okay, so you put a stop at what, 85? So you're betting $2 to make 15. Like, you could
Yeah.
be wrong on that trade a lot before you make any, before you're, and still not lose money. I mean, so that's the thing, is it's just, you can't think of it just as this trade today. It's, what if I do that? Like, does that trade show up over and over and over again? And if that's the case, what do I have to bet for? What do I get to make? And, and that's like that's the logic, as opposed to, do I think this is a low and do I think this is a high? It's, if I'm wrong, what do I need to bet? And if I'm right, what kind of juice do you get? Hey, that kind of rhymed, actually. See how I did that?
So what do you think happens to crude prices if the US goes into Carg Island?
Oof. Yeah. The Iranians, there's two ways to look at it. That's their big export terminal, but they also have the Jask terminal, which is in the Gulf of Oman side. And, and it's not as big, but it still is an export terminal. The other thing is that the Iranians moved, I think, 23 million barrels of oil in floating storage outside of the Persian Gulf, which gives them quite a long time. They only export, I think it's 1.8 million a day or something. And so that gives them, a couple of months worth of revenue, if you will. So like, again, like, you can count barrels left and right till the day is long, but the point being is that it depends on what they do to Carg Island. If they just take it over, that's one thing. If they bomb it to smithereens, that's another. There's another couple million barrels that isn't coming back anytime soon, even if peace breaks out. I mean, you look at Qatar. Um, like, it's not just a matter of turning it back on. It's, one of their main LNG facilities, one of the biggest in the world, is physically bombed. And not only can they not turn it back on, nobody's going to start investing and working at the construction site and paying people until they're convinced that there is a durable piece. And that just isn't, that just isn't there anytime soon.
Yeah, so heads up, guys. I'm watching that. So it looks like crude just breached over that 93.34 pivot right there, right about
Well,
here.
if you look at the forward month, Manny, it's just over the $90 range. That's the one that I'm really looking at, is the June contract.
Okay, so what is that? Is that CL?
The CLM contract?
CLM. Okay. Oh, crap. Hang on. Let's see if I can pull it up here.
Yeah, CLM 2026. I mean, that's where, and we're also getting a little bit of distortion just because it's make or break time, right? So with the expiry of the contract, but
got it. Okay.
But that's all there is to trading crude.
Yeah, and so what is your execution time frame?
All of them except weekly. I don't really do weekly trades, but I use weekly just to sort of see which way the tide is coming. But I like daily 4-hour, 30-minute and 5-minute, and I'll actually have trades on all of them. If I think there's going to be a really big move, like for example, there is still a risk that crude could go to $200. Then fine, for a few pennies, buy some options, and sleep at night. Right. Like, I mean, so you can do that. But for the shorter time frames, it's very simple. I mean, swing trades are better for the 4-hour and daily time trades or time frames, and the hit and run trades are much better for the 30 and 5s. So,
makes a lot of sense.
That's pretty much it. Some guys trade the 1 minute. I think I used to do that into settlement because you usually get a lure you out into the deep water trade setup right before settlement. Just like yesterday was a perfect example of that. I posted it in the room, and as soon as it starts showing signs of life, 10 or 20 minutes before the settlement, you usually get a violent move the other way. And that, that's a pretty common trade, especially on Wednesdays. It's kind of arbed out now, but a trade I used to use that really worked a lot from COVID was on Wednesdays, you would see the EIA report come out. And if it was a bullish report, whatever that just wait till that move started played out and then fade the heck out of it. And that would usually be the case into the rest of the day. And that's exactly how it played out yesterday. It tends not to work as well anymore because I think a lot of people caught on to that trade. I'm not the only genius that saw that, unfortunately. But it's but there's still lots of those, right? Like, I mean, there's still lots and lots of those trades. If you like the treasure hunt of finding setups, I mean, you only have to back test or look at this stuff for a year, and it'll eventually arb itself out. And you can tell that because you'll see the technical indicators still working, but just the margins on your trades will be going down. And that's the check engine light to tell you that this isn't gonna, that this trade's not gonna work for much longer.
Right. Good stuff. Yeah.
It's part of the reason why I like trading crude. There's always a new setup.
It looks pretty technical. Like I haven't looked at this. I think I traded this 5 years ago, and haven't looked at it since. But just eyeing it up here, I'm just trying to get familiar with it. It does look like it's it's just following. There's a pattern in here. It's a basic pattern. And this is pretty big. This is a 15-minute time frame, but here, if you got the breakout right here, you bought the pullback, then you're probably long somewhere about 90.09. But you got scales out of that because it went up as high as 90.68. What's each tick on crude worth? $10? I think it's $10, right, guys?
Sorry, Manny, I'm losing you.
Is can you hear me?
Hang on. Yeah, I think it's my internet. I'm just losing you, Manny.
Okay. So
Hang
not
on. I'll
sure.
hop right
Yeah,
back
I
on,
I
Manny.
saw you. I saw you froze. Okay. Okay.
Okay, let me hop right back on. I'll be right back.
Sure. Sure. All right, guys. Let's turn our attention off of crude for a bit. See the price rallied pretty strongly off of that 70.47 low. Another setup that I missed. I'm pretty pissed off about it because I just realized it while I was on the phone with Rev. That if you look at this, right, look at what Manny drafted this morning, dude. Trading on the stream is really more difficult than what I thought. So I had setup number one. Really got to get. I really got to get better about this, though. Seriously, like unbelievable, unfucking real. Yeah, I just posted this. I just had this set up in the arsenal. I posted at 8:30 in the morning. I'm over here twiddling thumbs. Could be getting paid. I thought we would get another spike down. So you guys had, I know I had that short. I took it off at 5 and 10 points, cleared that out while we were on with Rev. But I'm really pissed about not missing that 70.47 because that would have been the day right there.
Can you hear me,
And I would
Manny?
have had the short into that. Yep. Hey,
Oh,
welcome
okay,
back,
good.
Rev.
Is that better?
Welcome back. So yeah, I could hear you before. I never lost you, but I'm not sure. Check
okay.
the comments,
Anyways,
folks. Nope. Yep.
You were asking me something about how many barrels are in a. What were you asking me? How many? Something. You're asking me something about the crude contract, and it just got choppy.
Oh no, so I was just asking about. I was noting how different the front month is to what the continuous that I was looking at. I'm glad you
Yeah,
pointed
well,
that out
that's
to
one
me
of the
because
problems, right? Is that when you've got extreme backwardation like we do,
uh-huh.
it doesn't allow producers to hedge. Like they like when the back of the curve doesn't come up, they can't. They like if December's were trading at $110, you would have all the oil companies selling the hell out of that and then delivering against it because they can afford to produce 110 barrel. If their cost is 60 or $80, they can, like they rig up and go drilling. But when they can't do that, there's really no incentive because they can't, there's too much uncertainty down the curve. And if you take a look at what their drilling programs and all that are, they're not exactly, they're not exactly cranking up the capex to produce more.
Oh yeah, so the Madge just reminded me. I think the folks watching want to know what is the price of a tick on crude.
Oh, value of a tick is $10, and each contract is 1,000 barrels.
Okay, good to know. Good to know. Good to know.
Yeah, and if you don't want to trade like actual NYMEX contracts, I mean, there's USO and there's ETFs galore. There's levered ETFs if you want to get into that. You can also, if you like to just buy and hold, I mean, you can. Another leading indicator, by the way, is the producers tend to front run the price of crude. If the value of producer starts going up with no rhyme or reason, that's usually a pretty good indicator that crude's going to follow. So, and some people like dividends and all the rest of that. The thing that drives me nuts is that with that, and why I don't trade it is why I don't trade the equities so much anymore. I might do some of the Canadian ones, but when something like this happens, when the investor ship comes in, the first thing you start hearing is about windfall taxes, and which usually puts some pretty good pressure on equity prices. So and then you end up with regulation, and then you end up, and so but the thing is, if you're actually trading crude or some crude derivative, you don't have to worry about the operational vagaries of one company to the next. I mean, maybe Chevron does really efficient drilling and some other company doesn't. So, you only know that after the annual report comes out. And by then, I mean, that's for guys that don't do what we do.
So are you trading it? So today, are you trading it long or are you trading it short?
Both. But so overall, you mean just today?
Yeah, just
Um,
today. What's the next trade?
yeah,
Long,
well,
long or short? Let me just pull up
right
the
now I
graph.
am long, and I posted it earlier that I was quote unquote irresponsibly long.
Well, yeah, no, I mean that's a trader, right? Makes an
um,
argument for lower and then gets long.
well, but what that just means is that I yeah, that's right. That's exactly right. But no, in all seriousness, I mean, I manage money pretty. I joke about it, but the truth is, gently, simply because it's what I do for a living. Like you
Yeah.
can't. I usually keep a few bucks on the side that I call my gambling fund just to satiate that impulse when I feel like it. But they'll hold my beer and watch this trade. I mean, that is a quick way to the poorhouse.
Yeah.
So, right. And I think you were talking about that while I was just waiting to come on. You were talking about there's an inverse relationship between how much you talk about a trade and how well the trade works out. And and you made a great point the other day. I thought it was such an important point. Like it was, I almost wanted to jump up and down. It's like, did you just hear what he said? Like, and that point that you made was that you just have to make the setup when it's there. And when all the fireworks go off, take the trade off. Like when the fireworks are going off is not the time to put the trade on. It's usually the sign of the end of a move, not the beginning of it. And I think that's a huge point, and crude's the same way. So back to your question about trading it long and short. I mean, like it depends on which time frame. There may be a time frame. Well, for example, since 2022, most of my profits have come from the short side, even though I did take intraday long trades around it. But it takes a while to get your head around that, and you need to make sure that your aggregate position sizing, if you've got 4 long positions, then you better make sure that if crude does decide to do something crazy overnight, somebody tweets something sitting in the middle of the night sitting somewhere, you don't you can't wake up to an ugly surprise. And so David in here is always admonishing everybody to make sure you've got stops actually on the exchange, and he's right about that. I mean,
Yep. That's good advice.
as Marty will tell you, owning racehorses, it's you got to be very careful owning something that eats while you sleep.
That is too
So
funny. That is hilarious. Like kids.
there you go. Right.
I guess we don't own them. They own us. Never mind.
Well, you're not wrong about that. But anyhow, but to your point, to your question, I mean, you just have to be ready for that banana peel to happen. I mean, I've had it more than once, where I make a call and the call doesn't work out, and some guy goes, "But you said this." It's like, well, you know what?
Yeah. Give
It's
me
a
5 minutes.
call.
I'll make
It's not a
another one.
crystal ball.
Yeah.
Yeah,
No,
that's exactly right. I mean,
yeah.
so so it's just bury it where it fell and move on. Just make sure that you never put a trade on that puts you out of the game. But if I have all 4 indicators, telling me, like all my indicators on daily, 4 hour, 30 and 5, all telling me the same thing, like for example, to get long, well, there's probably a reason for that.
Right.
So you should have a max position on. And if you don't, then like, and if you don't want it, like you either take the signal when it's there or you don't. And you only can have the confidence in that if you've experienced it and back tested it, and and you've lived and breathed it for long enough where you kind of don't care whether this trade works or not. You care whether or not you start having big series of trades that stop working, and then maybe you go back and reevaluate whether it's on.
That's a good point, Rev, because I mean, people, I remember, when I used to trade and I used to put on a position and I was, I'd get getting snot on my screen. I was watching it so closely. Right. And now, I don't know, I know some people may find this hard to believe, but I'll put on a position, like I'll wait for the setup. Like yesterday, I put the setup on, I knew where the stop was and I left because I'm like, oh, there's only 2 outcomes. It's a linear event. Either I'm right and the OCOs take care of themselves, the triggers, the scales get hit, or I'm wrong and I'm going to get stopped out. But me being here and watching it is going to make no difference. And so I often, more times than you guys think, especially when I'm not doing well, I'll put the trade on and I'll walk out of the room.
Mm.
Just let it play out. I already know where the stop is. I'm either going to get stopped or I'm going to hit the target. And me being there can only, I used to have a big sign up on my desk, remove the human element, because me being there can only get in the way of things. And I've learned that over time, hey, trust the strategy and let it play out. And I've gotten myself out of some good trades by like just being worn down mentally by looking at too much price action. You start to think that, like you said, every blip is something is to be read into. And so
Yeah.
yeah, I tend to do that a
Well, not
lot
every two
more.
ticks is a trading signal, right? I mean,
Right,
and
right.
and the thing is as well, Manny, I mean, you're so ruthlessly disciplined and organized, and the thing is that whether or not, that's all great, but it's only great if you're going to actually adhere to that organization, right? I mean,
Right,
you can have the
right.
greatest system in the world, but if you're going to try and outsmart it,
Then,
you've
then you might as well just go at it haphazardly, right? It's like
exactly, like, like roll the dice. At least in Vegas, they give you free drinks. So
yeah,
I don't. So I think you're absolutely right about that. And but for me personally, and and we talk about this a lot in the room with the guys as well, is that if you're really that nervous about it, there's a real simple solution, and that's just reduce the size. I mean,
yeah,
really,
yeah,
you're not
yeah.
worried about whether the trade is going to work or not. You're worried about whether you're going to get a paper cut or you're going to get the guillotine, and that's really what. And when you start functioning from that part of your brain, nothing good happens. At least, I mean,
Yep.
just when you're standing up, at the plate, and it's bases loaded, bottom of the ninth. I mean, you shouldn't be thinking about that. You should be thinking about your stance and how you're holding the bat and watching the pitch. And are you looking for the red dot saying it's a cutter coming, or are you looking, like that's what you should be paying
Yeah,
attention to.
so there's some that we coach heavily is that, there's no
Oh,
thinking.
what?
No thinking. We train and then we go play and we allow our mechanics to take over. I like to carry that over. There's so many different good things that I teach and learn that I've learned in sports, and I teach to my athletes, that I also, help some of the guys that I'm coaching with, in that you have to train. So I have a new guy that I'm working with, and he doesn't understand what we're doing, but I'm having him do 3 months, 3 trades a day, all in, all out. And that's all he's allowed to do. But he doesn't understand. He's still, he's looking at different methods and so on and so forth. And what I'm trying to do with him is to train him on uh, it's not the method right now that I'm training. I'm training the structure around, hey, this guy, if he starts out the wrong way, he's going to be taking 12, 13 trades a day, right? He's not
Mm.
going to know. He's going to get into a trade and it's going to be working and not know where to take profit. He's going to start moving his stop. I'm training those things out of him through muscle memory. He needs to do it over and over and over again. And once he gets that established, then we're going to move forward with strategy talk and how to execute that strategy. But this is the way I would have learned it. I would wish I would have learned it was get the discipline part right, get the structure right, and then move on to the next component, which is what is your strategy, and then following that would be executing that strategy repetitively the same way.
Yeah, and a lot of people can't do that. I mean, like if it, every single, I think, and I've never had any like formal trading coaching, so to speak, but we've all read the same stuff, we've all seen the same stuff, but something as simple as you know just recording up the price when it falls below the 10 EMA. All you have to do is just write that down and do it 20 times or 30 times.
Right,
Just write the
right,
number down. That is a
right.
discipline. You're
Yep,
not looking
yep.
at whether a trade wins or loses. You're just writing it down. My theory is that a lot of people can't follow something like that because what they're worried about is that the thesis they have about a trading system is that they're going to discover that it doesn't work.
Right,
That's the
right.
part that they're
That's the fear
that they're
part.
Exactly. And it's like, well, then fine. Then if it doesn't work, then either tweak it till it does or bury it where it fell and hurry up and get on to the next thing. But it's right. I mean,
Yeah. No, so and to your point, Rev, one of like about the 10 period moving average, one of the things that so I had a mentor and she worked with me, and that I learned a lot of these tactics from her. One of the things I used to do was I used to write down the internals every 15 minutes, right? I just got
mhm,
into because she's had me do it. And I was like, what am I learning from this? It was about setting a cadence kind of like to what you do during the day. And
that's the
that
word.
and that ended up forming, good habits. Yep. Yep. Jay Murrah, Hugh, we talked about that. Sorry. Yeah, that's setting up good habits that will serve you for a long time. So it's kind of like this new guy that I'm working with, and he's listening now, but he doesn't post. Um, uh, I tell him, if you've ever watched the Karate Kid, I'm like, you're Danielson right now. We're just, waxing on and waxing off. Just do what I tell you, and you're going to come out ahead in the end. I wish somebody would have done this for me. And
Yeah.
I often like I'll show people like like the amount of like I can show you guys here. Like look at the stacks. I have stacks and stacks of journals that I've kept from the years and decades of suffering, and I have it on my other uh, bookshelf back there. It's another bunch of stacks of journals. And writing things down, guys, I cannot explain to you what it's going to do for you. The process, it's not, sometimes it's not even about what you write, it's the process of writing things down and what happens in between those lines. A lot is going to happen for you, but it can only happen to you by you. So you have to do the work.
Manny, what you just said is so hugely important. I mean, there's an old expression that, if you've got to go through hell, at least bring something back with you, and that's exactly what you just showed everybody. And your own journaling is, you have to do your own. I
Yep.
could come to your house and read
Keep
all
one
your
right here.
journals, and it's your experience, it's not my own, and it really has to be. I think the other trap that I've found as well is, you know I fell into it earlier on, but I see it now with other guys, is that they're always searching for the next idea, and when they find something that works, and when they find a way of trading that works, they don't go, this is great, now let's start doing this. They say, okay, now I've got one that works, let me go find another one, let me go find another one. And you spend the rest of your life chasing this elusive holy grail, and you never actually start trading. And like, there's 100 ways to do it. I think that one of the best indicators of that was, I think it was in one of Schweiger's books early. He was saying something about how, and it was the real light bulb for me, is that you had guys in there that thought a 2-year trade was a hit and run trade, and yet other guys that thought that holding something for 4 hours was a long-term investment. And they both thought the other guy's method was crazy and would never work, and yet they're both highly successful. And there are lots of examples of those. So then I start looking, okay, well, what rules do they have that are common to both of them? And if somebody's a hit and run trader and somebody's a long-term investor, if they've got any common rules, those should probably be rules in your toolbox as well. So rules like risk management, rules like consistency, like those types of things, are important. So it doesn't even matter how you trade. It just matters that you understand it, and that it works for you, and that you can do it consistently. That's the big thing. Because if you look at crude, if you try and outsmart what 15 different governments are going to do, and 23 different militaries are going to do, and 6 giant trading firms are going to do, I mean, like, hey, if it works for you, great. But I know that I don't have keys for those doors. So I'll take what I've got here and keep going. And I think that's so back to your, to tie this all to a point, Manny, of what you're always espousing is, it's not so much what is the level, what is the chart pattern. It's, at, you can use all the basic patterns, you can use all the basic levels. I mean, crude trades pretty technically and lives in lots of different time frames, but it's really, if this breaks down, how far does it have to go before I know that it's broken down? And and how big is that, versus if this trade plays out, where is it likely to go and how much do I gain if it does? And if you can exceed 3 or 5 to 1, you don't have to be right very often at all to be.
And you should. Sorry.
No, that was it. I was done. Sorry, I go on a lot. My apologies.
And no, you're fine. And you should know that like by the back of your hand. So you guys all now are familiar with the way that I trade, right? So everybody pretty much knows I put out, I have setups, I trade the algorithms, but my own point and click trading, right? I know, right? You guys know that I take, if you don't know, then the guys that have been trading with me for a while know that I always take a 5-point first target. I always take a 10-point second target. And then sometimes I'll leave a runner on. But here's the thing, my system was designed like this, right? So I know that I designed the system to trade 3 contracts, 3 ES contracts, right? And if I take a 5-point first, a 10-point second, 15-point third, then I only need a 33% win rate to make the system successful. So those are the kind of numbers that you need to know, because they'll put those, arbitrary losses that are just the outcome of a edge that didn't play out on one occurrence. That will put that on ice for you, and you'll be able to get back to your system. Like after a loss, you should be looking forward to the next trigger, not just this holy shit, where am I going to make the money back from? Take the time out to develop it. That's the long-term answer. To look consistent profitability.
Yeah, or taking out your mistake on the last trade on the next one.
Yeah, no, I never do that.
Yeah, no, me neither. I've never done that. Yeah. I'm perfect. I never break my rules ever. So just luckily not enough to do any lasting damage to my account so far, at least. But yeah, that in a nutshell, that's kind of one other thing, by the way. And I'm just seeing, just out of the corner of my eye, watching what Crude's doing here. One of the things that Crude loves to do are these little loops above or below moving averages. So if you, Manny, can you
sure,
just go a 5-minute Crude chart just for your viewers that they'll probably
just give me 1 second here, Rev. Hold that thought. Let me just you guys see I'm always constantly readjusting the algos to how the day is unfolding. So I'm just making some changes here because I've done well. I want to protect some of that profit. I want to tighten up the risk. I want to adjust them as I go on, and that's what I'm doing now. So let me get that. Okay, good. Done there. Let me bring up the Crude chart for Rev. Here we go. I'm going to blow this out here and bring up a 5-minute chart. Here we go. All right. So here's a. So I can highlight the overnight sessions are in light gray. The regular or do you want me just to continue?
Just a 5-minute chart if you got one, Manny.
Yep. Okay. Yep. This is a 5-minute chart. Do you want it zoomed into today?
Yeah. Last 2 days maybe.
Okay. So here are the last 2 days. This was Wednesday. Yeah, this is Thursday.
So if you look at right where your marker is there, there's a nice little rounded top high, and right before that there's another semi-rounded top high
right here. Yep. Right. And yep. Good eye.
It loves doing those little loop-de-loops, where it'll get a standard deviation or two above the moving average and then drop right back down to it and repeat itself over and over and over again when there's an uptrend. And the same is true if when it's trading below its moving averages. It loves to do that as well. And for guys that like high win rates, that's a great one. The problem is that if it doesn't hold that, it tends to really go below it and really quick. So it's important to have a stop, where it's not in your control, where you're looking at it going, should I get rid of it? Should I keep it? If you do that, you're you're going to get mowed.
I
So
had a friend years ago when when I lived in New York City. He was a crew trader, and he used to stop and reverse. I don't know. What are your thoughts on that?
if it works, like, don't argue with success,
Right.
right? Like,
Right.
if
Right.
it's working, keep doing it. And I think that's the thing, is that what I find also, and Manny, I mean, I couldn't carry your baseball mitt when it comes to coaching skills, but the thing is that what I find happens, just in people that I've helped explain this to, or semi teach it to, or is that, and I am not a teacher at all, but but people are always asking, and so no problem, right? Yeah, happy to share the knowledge. I mean, that's how I got here, is because of Danny and Marty. I mean, so you got to pay it forward at some point. If you don't teach new traders, then there are no traders. So um, but anyway, where I was going with that is that they tend to find something that works and they get excited about it. And so they start telling other people to validate it. And what they run into is a wall of people saying that won't work. Why?
Right.
Because it didn't
Right.
work
Yep.
for them.
Yep.
If
Right.
it works for you, don't argue with success, just trade it, until it doesn't. Because at the end of the day, you can have all the YouTubers in the world saying you're the greatest thing ever, but your account is what, tells you whether you're doing the right thing. There's an interesting line. I was watching Teddy Atlas, Mike Tyson's former trainer, and he was talking about, he called the ring the chamber of truth. And he said that, when you go into the ring, you can have all the bluster and all of the promo and all that you want, but whether you trained the right way for that fight, and whether you actually are ready for this fight. And when you get into the ring and you face the other guy, it gives, your training gives you a superpower. It gives you the ability, if you didn't train and it's just all machismo, it gives you the ability to detect whether the other guy did. And that's when you're in big trouble. It gives you that ability where everyone in the audience can't see it, but you can. And that's the key thing, is that, like, at the end of the day, and so seeking validation, from everybody else is, it's a pretty limiting game. I mean, at the end of the day, if it's working for you, it works for you. That's it. You don't need to. And if it's not working for you, it doesn't. There's no amount of, moral
So
and
one of
emotional
my
that can
one of
help.
my first mentors was a guy who I met in the Mr. Top Step chat. And he
Sorry.
was legendary, right? He was
Go
pretty
ahead.
well known. A lot of people followed him. His name was WB, and he was the first guy who took that time out, talked to me over the phone, explained stuff to me. And he was the one that pointed out, he said, look, if it's not serving you to trade better, throw it out. And in the context of that statement, what he was referring to was, well, with what you're saying, I was trying to explain to someone why I thought this would work, and they were saying, "Oh, that'll never work." And he's like, "Well, why don't you try it and see if it works out for you, right?" And then what that ultimately truth be told, that started the beginning of it, because ultimately what I did was I tuned everybody out for like a year. I traded by myself in a closet, like literally no news, just me and the chart. And that was the first step to profitability for me. And that was like way back in, like, I don't know, like 2014, I think. I think that was like, yeah, 14. That was the first step for me in that. But first, I had to tune everybody out in order to focus on what I was doing and to see if it worked. And then later on, I got bored as AF, and I started to, you know, communicate more with other communities. But by then, I already knew what I wanted to do. I come in every day with a plan, and I knew that I was trading that plan. And then it became fun to watch other people, to see how other people did it. But I already had a base case for myself, and then I was able to pick up other things from other people and add them to my toolbox. So hopefully
I think
that'll help
that's
you guys
huge,
out.
Manny. What you just said, it is huge. Like, there is no glamour and glory in doing it on your own. But I honestly find that the most exciting part of trading is well executed trades. You never know how much the market's going to pay you. If I see a buy indicator, you put the trade on, And when there's an exit indicator, you take the trade off. And when you do that over and over and over again, there is something incredibly gratifying about that. I find it's more gratifying than taking some, rule breaking trade that you end up stumbling into some big windfall profit. That actually makes you nervous, because the truth is in your conscience somewhere, you got away with it. It wasn't skill or a stroke of genius. And personal heroics and random lucky breaks are no way to give you the confidence you need to keep doing something over and over. Somewhere in you, that if you're trading that way, sooner or later, you're going to get caught and you're going to step on a banana peel. And, and sometimes it takes experience to work your way through that. You're 100% right about that. Like, that really resonates with me, what you just said. And one other thing, if you don't mind me adding, Lauren and Danny that were on yesterday, I caught a good chunk of what I'm really glad that you guys brought them on, because I just thought that, they had a very, very level-headed, very easy to absorb, and very well organized approach to things. And I think that's really important. There's so much, hey, I nailed a 300 to 1 trade out there in the world right now. And it's like, yeah, that happens. But, and actually, in fact, this is probably something we're telling you, is that a friend of mine who sells exotic cars, and he's been in the business for 30 years, he's very good at it. He told me that the way he keeps his dealership running is that he has 3 different types of trades, if you will. He sells Porsche 911s by the barrelful, and he makes $5,000 a car. That's it. He doesn't try and make more. But he churns and burns those, and he knows he can sell 5 or 10 of those a month without even trying. And that keeps the lights on. Then he's got the sort of $500,000 cars that he sells 2 or 3 a month of. And then once every year or two, he'll make a few million on a speculative trade on one. But the thing is that what he says is that the mistake a lot of guys make is they go, well, why are we doing all these, all of these bread and butter cars when let's just stick to the multi-million-dollar cars? Well, without being in the deal flow, without, keeping your ear to the ground and being in, and keeping those trades going, you never get exposed to the really big deals. And it's the same thing in, like, take crude, for example, with what's happening right now. I mean, I've been grinding out crude for a long, long time. And, which is how when something like this comes along, you can identify it and go, yes, but this is why it's different than the other instances that kind of show up wearing the same costume, looking the same, and you can't just show up once every 4 years and decide, oh, this is a home run crude trade. Even if it is, you won't have the psychological stamina to stick with it. Take a look at what happened with silver last year. I mean, silver, from, was it April or March of last year?
Went on a tear.
Well, for sure. But there were a lot of days where it was down 10% in a day, and, if you take a look at even something simple like the tech stocks, like Apple, I mean, how many times has Apple had a 50% drawdown? And how many people were able to hold it through that? So it's not as easy as it looks unless you're doing it all the time. And so to tie this to a point, I mean, that's where it goes right back to the consistency part. If you're at the batter's box and that the way that you swing the bat will yield you a 380 batting average, don't try and outsmart every pitch and reinvent your swing. Just keep swinging.
Yeah, Rev, give me 2 seconds. I'll be right back. Give me a second.
So I guess while Manny's away, I can say whatever I want here. Good thing that I don't.
All right, sorry about that, guys. Quick update. So, all right, so great stuff here this morning, guys. I can heads up real quick. Just let me give you guys a quick update though on the ES, right? All right, so
all right, I'll hop off and let you get back to it, Manny.
Oh, great. Thanks, Rev. Thanks for stopping by. I really appreciate the insight. Always glad to hear from the Revster. Rev, I'll hit you up on the sidebar. I want to try to see if we can bring you on sometime later this week. But thanks,
Yeah,
Rev.
I'm
Thanks
happy
for
to do
stopping
it.
in.
Yeah, no, you
Yep,
guys are
yep.
a great bunch of guys, and I've really enjoyed, being invited to be part of the community, and I hope it adds some value to your community as well, because I've certainly learned a lot, both from you personally, Manny, from Danny, and from each of the guys in here. So thanks for having me. It's a real honor and a privilege.
No, that's great. And guys, we're going to be bringing on Rev regularly here as soon as we get the schedule sorted out. But no, thanks a lot, Rev. Appreciate your input.
Okay, you're welcome. Bye, everybody.
Take care. Bye. Bye. All right, guys, just quickly, let's review the ES, right? Let's review what we said this morning, and let's talk about the what's next, right? So obviously up on the screen, I have that algo trade going on. But we said this morning, right, we were looking for that look below and fail of the overnight low, and that's kind of what the ES did here. Let's just bring this out like this. Right. So we got the look below and fail. And then we gained the acceptance right back above the overnight low. This was probably your entry bar right here at 1055. Again, I was on with Rev and I didn't take the trade. I had two trade setups. The pre-planned setups were at, I should have been long 70.47. I was short from up here looking for that 10 a.m. low. I got 5 and 10 points out of it. And then I just didn't want to get right back in on the long side. But we did the reclaim and it's working out really nicely. Look for now the extended leg, right? So the continuation above the overnight high. So something maybe like this, where we come back in, maybe test up in here into this kind of area right here. Wait, hang on. Where we test right up into this area. So come up, pull up, right? We already got the pull up. We come back down, form some acceptance in here, and then look for maybe we can get like a, something like this where we come back down, it comes up, maybe it comes a little bit further down, comes back up, and then, you can get long on this type of move, right? So it comes back in, let it fade down a little bit further, then it reclaims the overnight high, right? So yeah, the thinking there is trap, right? Like let's let the overnight high look above and fail, guys, get their trade on. Okay. Let's just walk through the logic here again. Hang on. Something I want to do here. Okay. Let me erase that. Erase that. Change that. All right. So hey, so the idea there, look, so it's actually materializing right now. So we got the thrusty move up, look above and fail. Maybe we come back down here, test in here, and then say we come down, come back up. Maybe we come down a little further, test the open, come back up, and then look for the continuation, like right back above here on a pullback. Okay. All right. So that's that setup. We also were looking for that AM low that I posted in the chat. We have that low in place now. Now we're looking for that midday high. So look out for that. That's going to wrap it up for me today, guys. Hopefully we brought some value to your trading. I hope that you guys were able to execute. I thought Rev did a great job in adding some value to us here today. Yep, that's going to call it for me, guys. All right. Thanks for showing up. Appreciate you all. See you all again tomorrow. Take care, guys.